Once. Hello, good evening, traders. Uh, it's W.C.K. So we are going to focus on a few things today. Today we are going to have less time on the charts, but we are going to understand two things. Okay, we are going to understand. Okay, we are going to understand a few things today, and we are going to look through risk management, specific risk management, and after risk management, we are going to have a simple understanding on the forex trading industry concept. You know, most of you traders, recently these days, most of you traders, we focus so much on the charts, and yet all we need is few minutes on the charts to make money from this industry. So we are going to look at our risk management. We are going to look at risk management. We're going to look at risk management, and then the FX trading concepts. So that's where let's start from the FX trading concepts. So as a trader, if I happen to ask you, how do you understand this forex trading industry? What is it? Is it a market like any other market? And what makes it special? Okay, what makes it special? Why is it one, or actually, why is it the biggest market in the whole world? Because I remember it was 2017, when they used to tell us that the forex trading industry, they transact almost 6 trillion per day. But I don't think we are still having the same figures. I think we have either multiplied that figure, or even we have maybe 2 times or 3 times. Okay, so this is one of the most biggest market in the whole world. So what makes it special when they say it is one of the biggest? So you shouldn't be surprised that the forex market is one of the biggest trading in the biggest industry in the entire world. You shouldn't be surprised. Why? Because we are dealing within two things. We are dealing in one thing, forex. Okay, and when I say forex, it is money. So whatever market you see out there, you need money for transaction. Even if you people are those who are so much focused on crypto, okay, those who are so much focused on crypto, you say that the reason why crypto was bought is to avoid the fate, because that's how we call it in crypto. But it is money that to avoid this money, that's why they bought in crypto. They bought in Bitcoin to avoid those sanctions the government always put on your funds. Okay, the monitoring the government always do on your transactions, so that Bitcoin is solving that issue. But it's wrong, because even in the crypto market, we still need money. It still needs money to operate. So even if you go to the stock markets, even if you go on the Wall Street, or what we call the pit, where most of the stocks are bought and sold, you find that still money is involved. So whatever market you mention, money is involved. Even if we go into the derivative markets, okay, where we have the VIX, VIXA, we have the boom crash. Yes, they are markets, but still money is involved. So even if we go into the bonds market, even if we go into the energies markets, even if we go into the minerals market, commodities, at the end, money is involved. So since money is involved, it makes this industry one of the largest market. It makes the FX market to be one of the biggest market in the entire trading, in the entire what? In the entire financial market. So you people, you don't, we have, you always mix, when I say, when they ask you, WCK, what's your job? And you say, I'm a Forex, I'm a trader. Okay, trader enough. Saying I'm a trader, it's not enough. Okay, you have to simplify things. You're a Forex trader, or you are a stock trader. You have to be falling in a certain in a certain market. So all of the things you see, the Forex market, stock market, bond market, river on the bond market, the commodity market, crypto market, all of those fall under one thing, which we call the financial market. Okay, so financial market is the main man. Then the FX market, stock market, and others come in as what? As the smaller components of the financial market. Now, our focus is on the Forex market, and you have seen why is it the biggest. When they ask you why is it the biggest market, it's not only about the money transacted within this market per day, but how it is, its form, that it is dealing specifically with the money, and the money is being involved in whatever market out there. So, how is the Forex? How is Forex? How does Forex intervene in the stock market, in the bond market? How does it intervene in the commodity market, energies? How? Money. If I want to buy, let's say, gold today in the commodity market, for example, let me use Uganda, where most of us are. So if I'm in Uganda and I want to, if I'm in Uganda and I want to buy gold, what would I need first? It would be money. Okay, I will not use barter trade. I will not use barter trade to buy a bar of gold. Okay, I will not need it. All they need is money. So as I'm making that transaction, that I'm using, let's say Euro USD, or I'm using, sorry, Euros. I'm using Euros to buy gold. So on the Forex market, it will be like Euro XAU, okay, or versus XAU. So if you see that if I go to, let's say here we have the mines in, is it Kasanda? If I happen to go to Kasanda, where they are mining gold, and I want to buy gold, okay? So if I want to buy gold in Kasanda, and all I have is gold, is USD. So I'm going to buy gold using USD. So then here in the Forex market, we shall be having a pair called USD stroke XA, or XAU versus USD. Why is it like that? It is because I'm dumping one asset to buy another asset. So this time around, I'm dumping the dollar to buy, so that I get gold. Okay, so I'm dumping euro because I'm giving let's say the seller, someone who has gold, the owner of gold, I'm giving him euros so that he gives me gold in return. So meaning deep down inside me, pay attention here. It means inside me I have felt that I think 10,000 US, let's say 10,000 US dollars is way more worthy, or it will be if I use 10,000 US dollars to buy gold, okay, it means gold is very worthy, or it has the capacity to generate more funds than the 10,000 US dollar I do have. So in return, let me give it there and they give me gold. Okay, so mark there that the person, whatever transaction has been made, me buying the gold and someone giving me gold, all that has been decided depending on my emotions as a person. Okay, so as a person, if I decide, actually from the time I decided that I'm going to withdraw 10,000 US dollars to go and buy gold, okay, many things have happened on that way. I had to make analysis to know how gold is, okay, how am I going to transport it, how much will this guy ask, how will I negotiate, is this the right time to buy this gold, okay, is this the right time to buy gold, is the guy I'm buying gold from trustworthy, okay. So those are the things you have considered as a person before buying that gold. So that simple model I have explained to you, take it away from a person like W.C.K. Expand it to a country. Okay. So if I can buy, let's say, 5 grams of gold, or if I can buy 1 bar of gold, W.C.K. If W.C.K. can buy 1 bar of gold, okay, at 10,000 US dollars, I think then a country like Uganda will be in position to buy tons of gold, okay, in exchange of what? So the secret here is on the money this country is using to buy that gold, okay, and the money, the one who is buying, who is selling that gold, is willing to accept, okay. So that transaction, like it or not, it will reflect in the markets, okay. So whenever you see candles, okay, the candles you are seeing today, they are not just candles. This is data, okay, and this is real-time data. This is the data which reflects, actually, whereby someone can't explain to, for example, today I can tell that USA is not doing well economically. How am I in position to tell that? It's by help of these candles. So this forex market, the candles you are seeing, it is data, or it is transactions made either between a country, between a bank, okay, or between hedge funds, or between bankers, those people who already have, between billionaires also. Okay, so those transactions, when they are made, even if we are not there, but we as retail traders, we are in position to know that, yeah, this transaction has been what has been made, even if I don't know exactly which transaction has been made, but the candle can tell that at least something has happened, okay. So and I will react depending on what has happened. So indirectly I'm going to be involved in whatever transaction has been made. So another thing I want to tell you about this forex market, okay, this is actually not only the forex market, but the financial markets of today. And all of you, as you know, the evolution, I don't know, that's why I said that today I will focus so much on the concept of trading. I don't know if you people are aware of that. If you have took time to understand the evolution of money, how money has been evolving from barter trade, and then we started, you know how it has been doing. I don't know if you have read of the industrial age, whereby they had to change from gold, and then they had to bring in money, okay. So man has been evolving, and we are lucky to be in a generation whereby today money can be represented with numbers, okay. So when I say money is represented by numbers, this changes everything, okay. This changes everything, okay. So how does this change everything? It means that it is data we are dealing with, okay. As we forex traders, mostly we retail traders, we mostly focus on data, okay. Our main focus is on data. How is it on data? It's because today someone like let me use we had we had the issue of Warren Buffett. He was it 2 months, 1 month back, when he was selling all his stocks, and they said that Warren Buffett has a record, is the first billionaire to be having 200 billion plus in cash, But according to you, do you think he had that money in a safe there? No. They are saying cash on his bank account, maybe because that's number. So money is, these days money is just a number. So meaning this has made the transactions to be easier and also has retail traders to be in position to trade with the big bankers or the big boys. Okay. So whatever you see on your chart here, it is data. And this data will let me know if, for example, as I used an example of countries, a country like Uganda, I'll use you. Let me use the first world countries like USA. For example, we have a war which is going on by Ukraine and Russia, but we have seen that USA has been supporting them so much. Okay, they have been giving them money, but have you realized that every time they have been announcing that we have gave these people this amount of money, it has been reflecting to the markets. Okay, whenever a war, actually, even if you see whenever a new war comes in, okay, the market changes. How does that happen? So let me first break down for you something simple about the wars. So let's use USA. USA has always been acting the country, as the country which protects others. I don't know who gave US that role, but it has been evolving in everything which doesn't even concern them. For example, uh, we have we have all seen that time of Ukraine war, how it started. Okay, as soon as they started the Ukraine war, they started closing off the war they had with the Taliban. Okay, it was USA fighting the war of Taliban, but also they had a war of Ukraine and Russia. So Russia is a very big superpower. So even if it's you, you wouldn't want to divide your resources between fighting the war of Taliban and also fighting the war of what? Of Ukraine. Yet they needed that war of Ukraine so much. So as an investor, let's say you are an investor, you want to invest in the USD, but you realize that this guy is already having a war, is fighting a war in Taliban, okay, and now he's fighting a war in Ukraine, and the same guy is also fighting a war in Israel, okay, is funding all those wars. So no one would like to risk his money to buy the USD because every investor will be asking this question: can they win all those wars? That's why we saw USA changing from giving Ukraine money, but they started giving them just weapons. They just started moving weapons so that also they didn't want to risk the US dollar so much because everyone is like, if you don't win the Ukraine war, because we know what is going there, of course, it is a sign that your USD, yeah, the USD is weak. You have spent a lot of money on the war, and then you have got nothing in return. And the same is happening when you are funding Israel. Are you sure they are going to win that war? If they don't win the war, it means you have spent a lot of money fighting that war, but in return, you have got almost nothing. So that makes your currency weak. Okay, that makes your currency weak. How is it weak? It's because you have spent a lot and got nothing in return. That's what investors always look out for. I want to spend money on something and get more from that thing. Okay, so that's why we see all those the markets reacting as it is. So the forex market, compared to other markets, this is a market which reacts on almost strong events. On every event, you see the forex market reacting. We have seen, for example, we had CPI, whereby we saw that we had effects in the forex market, a strong effect, but in the crypto market was almost nothing. The only reaction was on Bitcoin USD. Even if you go into the derivative market, you see that even if we have an economic event here in the financial calendar, then in the forex calendar, then you find that it is not affecting all the other events. Why are we facing such things? It's because this is a market which deals with the real time data, real time. Even if we are speaking right now, let's say as we are talking right now, I'm teaching you right now. This is a DXY chart. It is the USD index. Okay. as we are learning, as I'm teaching you right now, and then the message pops up that maybe Trump is stepping aside. Okay, once Trump steps aside, so those investors, those big banks, those hedge funds, they have professional people, people who are highly professional in analyzing data. They will, in less than 5 minutes, they will have already known what would be the result. That if Trump steps out, how is it going to affect the USD? Let's say if Trump wins today, how is it going to affect USD? Okay, so the concept of forex trading should be more on live events. Okay, not fundamentals or what, but live events, something live. Okay, you should be following everything. That's how you are going to be pushed with the concepts of trading. For example, if we are, for example, we've seen the debate which happened, was it yesterday, whereby Kamala and Trump, they had a debate, and Fox News was saying Kamala won, and then CNN saying Trump won. But you personally, as a trader, if you call up for you, who do you think won? So those are the things you should be following up. That's why I always tell people that forex trading is not, it's not something easy. It's not something you're just going to do the chart analysis, because that's the mistake many have made. Everyone, as long as you hear forex trading, you open charts. Okay, you open charts, you start analyzing from morning up to evening on the charts. Yet, whatever you are doing on the charts is already out there existing. You have not yet made maybe research. Okay, so the concept of trading is way far away from technical analysis. Okay, so I think now we have understood that how these events affect the markets and why the forex market is being said to be the biggest market or the largest market in the entire world. But now the question is still under the forex trading concept. Yes, I have understood how these events affect the markets. Yes, I have understood how how this data comes up. For example, I don't know if I've given you an example, but let me give you another example how this data comes up. Let me use USA, and let me also use Germany as an example. Okay, no, let me use Russia. So remember when we had, I don't know if you guys remember, when USA imposed sanctions, or the NATO countries imposed the sanctions on Russia. I don't know if you guys remember that. Those of you who support football, you remember that even, is it Abramovich, the guy of Chelsea, the owner of Chelsea, he was forced to sell it because he's a close friend to Putin, and the sanctions which were imposed on Putin were not to, they included not trading with anything with USA. Okay, but we found ourselves that one of Russia is one of the biggest supplier of gas in the entire world. But allies of NATO countries wanted to buy that gas, but sanctions are stopping them from maybe doing transactions with Russia. So Russia was like, if you want also, if you have imposed sanctions on me, then also if you want to buy fuel, if you want to buy gas from me, I'm no longer accepting USD. That's why we had to see the big dumps of the USD index when the Ukraine and Russia war started, because if you can't purchase, okay, if you can't purchase, if you can't purchase gas using the USD, and someone brings in your competitor, for example, someone says, don't bring USD to buy gas, but maybe use a dirham. Okay, use dirham. So meaning dirham is going to have got high demand. Why is the demand there? Because they need that money to buy gas. So meaning if the demand is high, it also increases in value. and meaning people are going to dump USD in exchange markets to exchange it with dirham, okay, so that they can be able to purchase gas. So in that line, it makes the USD lose value. So I think you are seeing how the concept works. It is not just charts, but you have to understand how this comes up. So we have understood how the concept works through country transactions, through bank transactions. Uh, also bank transactions have a big impact. Okay, I remember you guys saw what happened to FTX. Uh, that guy Sam who was arrested when FTX Bitcoin sold so high and he was termed as a scam. So if you go and make out of research, yes, Sam made some mistakes. That guy, the CEO of FTX, made some mistakes. He used the money badly, as it is self-explanatory how he used to live his life, spend on marketing, what. But also, if you go deep down, you see that there is banks behind. So you should not be fooled that since Bitcoin was brought to replace currencies, okay, so that you avoid the sanctions. So what also banks did, banks have bought Bitcoin. Banks have bought Bitcoins so much. As you are selling them for them, they are buying them. Okay. So they are using Bitcoin also to has a security to strengthen their business. Okay. But transactions between banks, they can also affect the what? The forex market. They can easily affect the forex market. So after leaving all that, we have understood how everything comes into play. Now the question is, what moves this market? The question is, what if you come and ask WCK what exactly moves this market? So what moves this market? What moves this market is one thing, and there is no solution for this. So this is a market which is moved by emotions. Everyone has emotions. Everyone has emotions. As long as you are dealing with the money, expect to have emotions because no one wants to lose money and no one wants to miss out. Okay, so you people always analyze the market, you come up with a support level, a resistance level, and when they ask you why is it that a support level, since you have always been focused on the charts, you start explaining, you see this candle, then this is the break of structure, then this is a change of character, this is, and then this is my support, this is, why is it your support? If we are using, ask yourself, we are forex traders, okay? Everyone who is watching here has tried trading. Ask yourself, when I'm drawing support and resistance levels, I depend on previous what? Previous support or a previous resistance to mark my current support or my current resistance. So how was it? What was, moment, abaana bagamba sound tono. Abaana aga sound. Headsets. Tewali. Okay. Okay, guys, sorry for that. So I've been saying that ask yourself, what was the first support level? Okay, what was the first support level? Or if not the first level, what was the first resistance level? So actually, your question should be, what forms a support level and what forms a resistance level? It's not that always it's going to be on the support level that you are going to come and draw. Let me use this. Okay. It's not going to be that always we're going to come that this is my support, my resistance level, and this is my support level here. Okay. It's not always going to be like that. And this should be a minor explanation. Okay. So let me explain to you why support levels, why resistance levels. So this guy I have told you here, the emotions. Okay, emotions form resistance levels, emotions form support levels. How? Let me break it down for you how emotions form resistance levels and support levels. So resistance levels, so as I told you, an investor, let's say you are an investor. Okay, let's say you are an investor. Let me, since we are in Uganda, I will use live examples, the things we can all understand, even outside the markets. Let me use outside the markets. Let me use numbers. So let's say you want to buy maize. You want to start trading maize. Let me hope we all know maize. Okay. You want to buy maize. Okay. So when the season is done, people have harvested and now they are, or they have started selling their maize. So the initial the initial price for 1 kilogram of maize is 200. Okay, that's the initial price. It is 200, 1 kilo. Okay, so many people will be like, since maize is at 200 as the initial price, it means it is very cheap. So what does this indicate? What makes a product cheap? Okay, what makes a product cheap? Any product, what makes it cheap? It is one thing: lack of demand. Okay, a product without demand, trust me, a product without demand, this is going to be cheap. Okay, so if a product has no demand, of course, it's going to be cheap, and it means it is oversupplied. So the product has no demand because I can get it anytime I want. If I want a kilogram of maize, I just go outside and I get one. Okay, even lower than 200. Okay, so meaning it is oversupplied. So this is the time whereby people almost have zero interest in any product, even if the forex market, even if what, people will have zero interest. I will not say zero, but low interest in that product. So if a kilogram initial price is $200, okay, so everyone will be like, no, I can't buy maize because it is oversupplied. So if I buy it 200, who am I going to sell it to? So if it increases in value from 200, okay, from 200 and it goes to, let's say, 400, okay, then people will start finding it interest in this. Okay, people will start finding interest in this product, and they will be like, if it is at 400, it has multiplied the initial what? The initial price. So what should we do? Should we buy now or we wait? So investors have one rule. This is the rule for all investors out there: buy at cheap price, sell at high price. So if maize reaches 400, no investor is going to buy it at 400. No one. They will be like, it is overpriced. So let me wait for some people, let me wait for this to lose some what? To lose some money or to lose some value, then I'll buy. So this investor will be like, I have seen potential in maize. Since it has the potential to multiply its initial price. So it has the potential. So what should I do? I'm going to buy. Let me wait for this price to go back to 200. Then I buy again on 200. Okay. So meaning 200 now becomes our what? Our support. Okay. 200 becomes our support because we want the we want maize to go back to that price so that we buy it cheaply. Okay, so many people will be interested, will start getting interest in this product, and 200 will be the price of interest, of high interest. So price of high interest then you have your first what? Your first support. So let's say price doesn't go back to 400, okay? It goes back to 300, 300. And those who have what we call fear of missing out will be like, if I don't buy at 300, what if it turns from this point? Okay? What if it turns from this point? So then you get what we call in crypto they call it FOMC. Also in trade, whatever in every market we call it FOM, or fear of missing out. You fear to miss out that if what if price changes from this level? What if it doesn't reach to 200? Okay, what if it doesn't reach to 200? What should I do? Let me just buy 300. So you can buy at 300, but the question is, do you have enough liquidity to hold even if they go below 300? And how long can you hold? Okay, so today you people, you are just doing it for the sake of trading, that I'm going to buy at this zone. When the market keeps going back, I'll keep on executing more trades. I'll keep on executing more trades. That's graphical. But do you understand the concept behind executing more trades? The people who are doing, that's why you see, let me use the Philippines of today. We have flippers today, people who flip accounts. They flip from zero to this amount, they flip from this, but at the end, they end up blowing those accounts. Okay, why do they blow up those accounts? Because they have been liquidated. Okay, in most cases, when you decide flipping moves with liquidity, with the high intensity liquidity, that whenever I receive a margin call, I will just open more trades. Margin call, I deposit more liquidity, I open more trades. I get a margin call, I deposit more liquidity, I get, that's how liquidity helps you out. But you have been doing that graphically, doing the analysis, the charts, what. But the concept behind is what I'm breaking down for you here. That for us, we have seen people doing it even outside the forex markets, like the concept I have told you of base. You people, you have all been in villages, and we have been seeing rich people in our villages who have built their wealth in trading those agricultural things. This is what they do. You'll be like, this rich guy in our village, he keeps on buying maize from us. He keeps buying maize from you. He even has a store where you can go and sell that maize from. Okay, okay, so uh the rich guy has a store where you go and sell you sell your maize from at cheaper price. Okay, at cheaper price, but him is holding. Okay, that's what the holding you have today, that you say W.C.K is holding easy trades. For you are seeing the graphics that I'm holding trades. For example, I have buys in your USD. JPY, I've been holding buys from since yesterday. But for you, be like, he entered from here and is holding USD JPY. I'm not holding USD JPY. I'm holding the dollar. I'm holding my dollar. I don't want to sell off my dollar in return of my yen. So that's the concept behind. So that's the also concept which is on the ground. So those rich people in your villages, they keep on buying maize. You be like, maize at 300, the guy is buying. Actually, sometimes they start buying even for 400, because those people, they will do their analysis and they will be like, people are vested, and the reason why maize went back to be expensive, it's because we are going back to the wet season, so people don't have time maybe to put it on the sun to dry, to maybe to do more products out of it, maybe maize flour, maybe porridge, what. They don't have the financial support or the financial muscle to do so. So what they do, for them, they will be like, the more they go into the wet season, will not be having this maize. So meaning the demand will be high. So this maize will go up to maybe 1K, okay, 1,000. So what these people will do, okay, they will they will start buying even from 400. They buy, it goes to 300, they buy, it goes to 200, if it goes to 100, they buy. We had that example here in Bitcoin of Michael Saylor. I don't know if you guys know that guy. The guy has been buying Bitcoin even when it went down. kept on buying, but right now he's in profits, very big profits. We had an example of is it Salvador, that country called Salvador, which is ruled by a dictator. That dictator brought in Bitcoin in his country. His country has been buying Bitcoin even at the lowest price. Even when it went low, even at six, I remember they started buying at 50K, 50K, 60K, they were buying Bitcoin. When the fall came in, they started buying that fall of FTX. They bought more. So you just keep on hold. That's the concept behind holding. The concept behind flipping, I've also explained it to you. That flipping moves with high capital intensity or liquidity. Okay, we shall talk about more on the liquidity thing. But the liquidity that when you get a margin call as a flipper, you have targeted 200, you have targeted 200 as your main zone. Let me use this. You are a maize seller, as we are using maize as our example. You are targeting to buy at 200, but you are afraid to miss out. So what you start doing, you have to see that your equity or your balance on your MT5 or yes, on your MT5 can help you execute as much trades as you can until they reach 200. If they don't reach 200 as a flipper, you will still be in money. But also that's how holding does. So meaning now we have 200, okay? We have 200 as a what? As a support. Then we have 400 as a resistance level, okay? So we have also seen 300 as another what? As another zone, okay? So if the market of maize changes from this point from 300 and it breaks through to let's say 700, so as a trader or as an investor, what would you do? You would be like, since they were struggling to break through 400, okay, if a kilogram of maize, if these people buying maize have been struggling to break through 400 a kilo, so what I will have to do is one, as someone who has low liquidity, as you, for example, as WCK, I can't, you say, my first question will be, if I start buying maize at 700, when should I dump it at the worst? What should be the worst price for me to dump it? Okay, the worst price I can say it is 300. If maize happens to go back to 300, it means that it has broken through 400 back to 300. So what am I going to do? I have to sell it off to accept the loss and sell it off. Why am I selling it off? To avoid the liquidation. Because the more I hold it as it goes down, the more losses I'll have to incur. So if I say that 300 should be the last price for this kilogram of maize, if I say 300 when I buy on 700, when I bought on 700, as soon as I say 300, I'll call that guy on my store and tell him sell off all that maize. Why am I selling it off at that price? It's because if 400 was strong for them to break through, I expected to hit 1K, but it has just stopped on 700K and then it goes back to 300. But if I start, I don't have enough liquidity. So my next target will be what? My next target will be 400. That's when I will have to buy maize again. If I can't buy from 700, then I'll have to wait for 400 to buy maize on 400 again. So once maize go back to 400, I'll buy there. So, but remember, before 700, 400 was our resistance. Okay, but since price has changed and hit a new all-time high of 700, then 400 becomes my support. Okay, so that's the concept behind trading. As I have explained it to you here, that's how the concept is. That's what you should understand more than your technical analysis, more than your what, okay, more than everything, more than whatever. Just understand this concept. Let me use this same concept to break down XAU for you. Let's first break down XAU for you guys. Uh, XAU USD. So the same concept can be seen and can be visible. Okay? The same concept is visible. Here, let's open our Okay, so you see this concept here. Okay, so I don't know if you guys have read the book of Elliott wave theory. I don't know if you guys have read about it. Elliott wave theory. You can check on my website, W.C.K markets. Okay, you can go in Google and put in W.C.K markets. Yeah, so it's the first website they will bring for you here. So the book is there. You can go and check in our library. You can go and check in our library. The books are there. Okay, the books are there. Yeah, so here is the book. It's called Forex Web Theory. You will go and read through it. So the web theory is like this. Okay, Eliot explained how emotions, okay, you can go and search out about the guy called Eliot. Eliot explained how emotions move these markets. Okay, remember I told you there is only one thing which moves the market. It is the emotions. Emotions have levels. Even Joram Powell has emotions. Okay, even the team he works with has emotions, but their emotions they have levels. Okay, for example, we have seen Joram Powell. I think this is now is it the sixth time this year when we wait for him to cut the interest rates, but they don't cut them. Why? They are afraid of what is going to happen once they cut off the interest rates. So they are emotionally trying to hold on, but emotions have levels. Trust me. Like even if which investors you know, which guy you know has emotions. So Elliot explained this. Elliot explained that the bull run always has four, always has five waves, and the bearish run always has uh, three waves. Okay, so it is going to reflect on the same thing, on the same example we used of this here. So let me first draw for you the waves and break down those waves for you. Let me see that to use here. Okay, so Elliot explained that we always have the first move. Remember when I told you that the initial price was $200? So always, sorry, 200 for the kilogram of maize, the example we used. So Elliot explained that the first wave, investors are always not interested in that asset. The first wave, investors are not interested in that what? Okay? Investors are not, I repeat, Elliot explained that the first wave, it indicates that investors are not interested in that asset. So if our initial price was 200, let me first draw the wave for you. It's wave 1, 2, 3, then 4, then 5. Okay, so this is the bullish wave. Those are 5 waves. Elliot explained that. Let me name them for you. Let me name them for you. So 1, we have number 1, wave 1 here. Okay, wave 1 is here. Then we have wave 2 here. Wave 2 is always here, the short one. Then we have wave 3. Wave 3 is always the longest according to Elliot, but also Dow theory also confirmed this. Okay, 3. Then we have wave 4, okay, which is also always a retracement. Then wave 5 is not that long. Okay, wave 5. Okay, so meaning we have wave 1, 2, 3, 4, 5. So let's break it down as Elliot explained to it. So Elliot was like, and this happens to every time frame, we shall see this. So Elliot explained that the market always moves with emotions. It's due to emotions. And remember, Elliot and there is a guy called, you people don't read books, eh? You like so much watching. For example, you are here, you come and watch W.C.K on YouTube. When I say we are done, I close and you go sleep. Bro, you have to make analysis. You have to read books, mostly actually read books more than watching videos, okay? Because books will make things clear for you and you get to know many things. Because now for me, I know these things. These are the concepts I added up to come up with my own strategy. Okay, these are the concepts I still use even today, even if I don't do analysis, but I just watch the Forex Factory, go down into their data. Then I use maybe the daily chart, look at the daily chart. Even if I don't go to any other chart, I can tell that we are in a bull run or a bearish run. But back here, Elliot explained that this market is being moved with emotions. And the bull run of any asset, the bull run of any asset is always, the bull run of any asset is always within 5 waves. So wave one, we can all see wave one. So this is where, this is the initial price here. Which line should I use? Let me use this trend line here. So let me make it red and let me make it dotted. So here, this is where we had our 200. Okay, this is where we had our 200. So let's say this is maize. Okay, so the price of maize was on 200. I'm using maize because Uganda has, they already said that this is an agriculture based country. So I know we have all been in villages, we have all seen those rich people, those rich guys in our villages, how they buy those agricultural products. And then from here, you move from town, you go and start bragging to them that you are a trader, you are good at analyzing the financial market. Bro, you know nothing. Those people know how to analyze markets more than you think. I don't know if you guys, I don't know what you watch on TikTok, but I don't know if you guys, you have watched the guy called Muhammad Kachika. So that is it, an headmaster of Vienna College. I've been following that guy for some good time. How he has built his wealth from agriculture. Okay, but those people are using the same concept of trading. Just that for us in trading, we are covered with a white cloth on our, it's actually a dark cloth on our eyes. What is that dark cloth? It is the charts. Okay, we always move our heads pointed on charts, but the reality is behind the concepts. Okay, so our maize was on 200 and no one got interested on this 200. Okay, so people were like, you know what, I'm not buying it. But surprisingly, after some good time, maize went on the price of, to hit a price of 400, as we said. Okay, because, okay, maize went and hit 400. This is the same concept. We are going to use Bitcoin to confirm this trend. Okay, so it went on 400. After reaching 400, people were like, you know what, 400, I think this, there is a potential. Those are all emotions. Now people start becoming emotionally strong. They're like, are we missing out on this again? Last season I missed out on coffee. Am I also going to miss out on maize today? No, 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 no. What I'm going to do, let me collect my liquidity, put my money on my bank account, wait for the price. Okay? Okay? So wait for the classes. Wait for the prices fall from 400 back to 200. But as we are approaching 200, that investor will be like, you know what? I'm not missing out because of 200. Let me start buying early. Let me buy at 300. Okay? But what makes this second wave? Okay, because there is also an emotional backup here. What makes the second wave, this second wave here? Okay, to see the fall, the simple fall after wave one. This is the time when people feel like, yeah, I have made a lot of money from this asset, let me sell it. We saw a guy, you know, you heard of that guy who sold the Apple stocks? Was it on $800, the Apple stocks? And many people are laughing at him that he was dumb. No, he was not dumb. That is human nature. He felt like, you know what, I have made enough. Let me take this. Let me sell off this. Let me give you an example. I remember when Dogecoin was launched, I was one of the people who bought Dogecoin. One of the things, actually, Dogecoin, I don't know if you people know a phone called Samsung A2. I bought that phone. You are using what? Using Dogecoins. I sold my Dogecoins. But Dogecoins, when Doge was launched, I bought it. I didn't know that even Elon Musk will back it one day. Okay? So when I saw an M on my Binance, I was like, this is enough money for me. I sold it. I bought a phone because I wanted it so much. Why? According to my emotions, I felt like if I only invested in 200, and today I'm seeing 1 million, that's a good number to multiply my investment. So let me sell it off. I go on another deal. On another deal, I bought a phone. After buying a phone, I went and bought XRP. As soon as I bought XRP, I don't know if you people know that Ripple, the coin called Ripple. It's XRP. After buying XRP, then the SEC, a trader should be knowing what SEC is. But you will find that since we are always focused on the charts, we don't even know what the SEC is. So the SEC came in and he was like, you know what? XRP is not a crypto. XRP is a security. Okay? So if XRP is a security, then it had to be removed from Coinbase. Okay, but according to my analysis, I was afraid to miss out as I missed out on Ethereum. So I was afraid to miss out on this XRP because when you look on Ripple, Ripple is being used in all banks to make transactions. Ripple is being used. So I was like, this is another big coin to come in. Okay, so after buying it, they were saying it is not what? It is not a crypto, it is a security. So they have been in court now for years. Okay, they have been in court for years. So I didn't make money from it. So this is the same thing happening here. So investors bought maize on 200, always use gold. They bought gold on 200. As soon as it clocks 400, as I told you, investors don't buy at high price. Investors buy at low price so that they sell at high price to make profits from it. So the investor only needs liquidity to back up his investment. So guy is like, you know what, I can't buy 400. I can't buy, let me use maize. I can't buy maize at 400. So so if 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 400 if 400 a kilogram goes to 300, investors will be like, you know what? Since these people have been selling, and remember, as others are selling, others are just holding. Okay, so others are holding, aiming for bigger results. So as soon as it clocks 300, the investors will be like, let me start buying early. I don't want to fear. I don't want to miss out. So there comes in the fear of missing out. So it is bad, but on other, it is bad for those with uh, low financial muscles. Okay, if your financial muscle is weak, then buying early due to fear of missing out is bad for you. But people who are well, who have good liquid, okay, people who have good liquid. I don't know if you people understand liquid. When I say liquidity, please, my friends. When I say liquidity, my ICT friends. When I say liquidity, don't think of that thing of all you always say that they will come and sweep stop loss here and they sweep take profit here. No. When I say liquidity, those who have done commerce, those who have done entrepreneurship, liquidity, this is the money ready for business. Okay? Okay? This is money for business. You understand, my people? So money for business, money ready for business. Liquidity is money ready for business. It's your money you are set aside that, you know what, I have to buy a 100K account. Okay, okay. I'm saying, guys, sorry for that. I'm saying that liquidity is money ready for business. I'm using this as an example. You have been seeing W.C.K saying he's doing copy trading, don't so? So to do that copy trading of WCK, you need $300. But what you're going to do is like, you know what? I'm going to start keeping my money aside so that I raise $300 WCK needs to do my copy trading on Taman brokerage service, you know? So that's liquidity. It's your money aside. It's not money for paying rates, not money for doing what, but it's money aside for business. Okay? So that's the same thing investors do here. They'll buy from 300. They'll be like, you know what? I can't wait it to go down as low, when it continues to go down, I'll keep putting in more trades. Okay, if it goes down, I keep buying more maize, more tons, 300, 200, more tons, more tons, because I have seen potential in this what in this asset. Then we happen to see another, wave, the third wave. Okay, this is always the longest. We are going to see this live on Bitcoin. Okay, this is always the what? The longest. So the longest is always emotions. Remember, we have had the liquidity from 200, and some people from 200 have been holding. Then we have more aggressive buyers. Aggressive buyers will always come in because they bought with a lot of emotions. They didn't want to lose, so they had to put in a lot of money so that they buy this asset as much as they can. So that's why you will see this big move. Okay, maybe that's 700. Okay, a moment. So 700, if you see 700 here, yeah. So 700 comes in. So meaning they have bought aggressively. They didn't want to miss out and they have made a lot of money. So what they will do, they will start selling off some, others will sell completely, and then we shall have the wave 4 and they can sell completely some others, because remember big buyers are in, so we don't expect them to sell that much. Okay, so what they will do, they can sell to maybe up to 500. Okay, they can sell maybe up to 500 here. So as soon as they sell up to 500, then more will buy to maybe the highest peak of, that's the 1K, and from 1K, 1000, from 1000 as our highest peak, then investors will start dumping this so strongly. So if you look here, so this is our Elliott wave theory. So let's see this in Bitcoin. It happened in Bitcoin and it has been always happening. Let's see it. Let's use Coinbase. Okay, so also here let's use, is it monthly? Let's use the monthly chart. Okay, so look at this chart. So we had wave 1 here. Okay, we had wave 1 here. This was wave 1. Then this was wave 2. You see wave 3 is always the longest. Okay, then wave 4, then wave 5. Okay, and now we are having the bearish trend. I have not explained that to you. I don't know if time allows me, we can go down through that, but you are seeing the waves. Okay, let me make it a bit sharper. Okay, see, so these are 5 waves: wave 1, 2, 3, 4, 5. So it means Bitcoin has been moved with emotions. Okay, totally moved with emotions, because the waves are highly visible, and this happens even in lower time frames like 1 minute, like 2 minutes, and also the bearish trend, because Elliot said the bearish trend, it's always in 3 waves, ABC, and then the process proceeds like that, like that. That's how the market moves. So I don't like to go so much deep into that. As I have told you, you can go on my website, wckmarkets.com. You can search it out. There is library, then you go and find the web theory. But before I wind up today, I want to remind you that as we have seen the Forex concept, Give the Forex concept a lot of time, because even if you master buying and selling, sometimes it's going to disappoint you. You are going to always have surprises. But if you have the concept of trading, you will not be surprised. Okay. For example, the analysis we had on CPI. Okay, we saw gold selling. We saw gold selling, and then it went into buys. Then we saw GBP USD has been buying today, Euro USD has been buying today, and I myself, I have told you that I'm still even holding my USD buys. Okay, I'm still USD JPY buys. This is simply the only reason why I am able to do that. It's because I know the concept of trading. I know how to analyze the data which was released on CPI, and I know I have the capacity to know how this data is going to be effective. How long is it going to be effective in the markets? Okay, that's why you have been holding USD JPY. Today we have seen some sales on USD JPY, but I entered down there and I executed more entries on USD JPY. Okay, so the concept helps you to hold. Okay, and it helps you to avoid some, how can I say, it helps you avoid some, how can I phrase this out, some discipline which will not help you in the markets. For example, me, I'm highly against the strategy of Philippine, because I have been in this industry for so long. I've seen what Philip has gone through. It's a very pressurized strategy. It works, it makes you money, but you are always on pressure. Okay? You are always on pressure. Are you working? If you are going to flip one, if you deposit 10,000 US dollars and you want to flip it, then you lose it in one night. Are you really working? Okay? So, master the concept of trading. Allow me to stop here, guys. It has been 1 hour, one solid hour of learning. So I believe Tamam Brokerage Service will upload a video for you so that you go back and watch everything. And also another thing I want to add is you people should always try hard to support who supports you, help who helps you, trust who trusts you. Because Tamam brings you traders like me. You know, if you see on my website, if we are to check on the services and you go under my mentorship, because the things I'm telling you here are some of the things I teach. So under my mentorship, you will see that online, just online, I teach it for $600, and that's 2 to 3 months, and I only teach you 2 days. Physical, it is $900. That's only the fees, not adding on my TP way to meet you where you are, or to meet me where I am, okay, or to organize where I'm going to teach you from, because that's also an extra fee. So you end up spending like 1,500, and buying only the book where I wrote simply about about my strategy, the impulsive strategy. It's $149. So that's expensive. That's W.C.K. So if you can't find praise is asking also another money, very big money. Mustafa asking big money, Shizi. So, but Tamam is like, you know what, you can come and teach it. People always on Thursday come and teach. That's it. So I think you should also return back to TBS. Okay, you should also return back to TBS. You should deposit money, trade with someone who helps you, trade with someone who supports you. So, and also another thing about TBS is WCK can be your customer support. If you have any issue, reach out to me direct. Reach out to me direct. I will be helping you out in whatever problem you have. I'll make sure that it is solved. But I don't expect you to find any problem, because we have one of the fast withdrawals. We have the best spreads. We actually, I have been posting this in my channel. You can go and check out WCK Markets official channel. You see that I've been posting these spreads. The spreads Tamam is providing you on a normal account, on a standard account. Some brokers are going to charge you extra. You have to go for zero spread, and zero spread they are going to take commission from you, very big commission from you, okay, because of the zero spread. But for us, we are giving spread which is actually, okay, unlimited leverage, and at the end you're going to charge me bigger commissions, okay. Here we are giving you leverage almost one to, and trust me, in your free time, reach out to me. I'll teach you that we don't have anything like unlimited leverage. We don't have anything like unlimited leverage. So reach out to me. I'll take you through that. But join Tamam. In case of anything, reach out to me, but I don't expect anything to happen. So it's WCK, guys. Allow me to stop here. Have a good night.